Hello guys, in today's video I will tell you about a few basic ways of investing in gold and silver. People don't give a crap about them until recession comes and they are panicking. Almost every time it looks the same. Stock crash comes, so people are selling everything they could, including gold and silver, just to exchange them for safe haven currencies and US bonds. It's not when dollar is getting stronger for a short period of time. Then they realize that recession is probably here, so they are buying gold. Silver is strongly correlated with gold, so it follows gold very often, but faster, because silver market is much smaller. That's why I'm almost sure that gold will pass $2,200 and silver can pass 100 or even 2. People say that gold doesn't pay dividends, and it's true, but Berkshire Hathaway doesn't either, and it's still popular. Anyway, they are not completely right. Gold can pay dividends if you're investing in mining companies or royalty companies that I will tell you about later in the video. So the main investment strategy is buying physical metal. There are many possibilities, but I will focus on useful ones only. So the best possible choice for both silver and gold are the most popular one-ounce coins, because it's very easy to check their quality. All you need is a smartphone and app. Most of them offer a quality check of most common coins for free. By the most popular I mean mainly Krugerrand, but also Maple Leaf, Philharmonic, Kangaroo, and maybe American Eagle. Buying bars is at least stupid because most of them are packed in 30 packs. Taking them off will destroy the certificate and decrease the bar's value, but without taking it off, it's hard to check its quality. So think about it. If someone wants to buy gold, will he buy a coin that he can quality check in 5 seconds, or a bar that he must bring to some specialist? Another option is a combi bar. It looks like chocolate and you will surely overpay for the metal. But if you're buying gold or silver in case of some apocalypse or hyperinflation, it's probably the best choice. It's easier to scratch 1 gram and pay by it than pay by 1 ounce coin that is worth over 20 times more. The second way is to buy ETF fully backed by metal. By doing that, you don't have to care about hiding and storage. Through my research, I've found 2 interesting units. In New York Stock Exchange you can purchase PSLV for silver and PHYS for gold. These 2 passively managed funds are fully backed by metal and are not speculating on its prices. They just buy it. Management fees are 0.67 for silver and 0.45 for gold per year. It's a great way to buy metal for spot price or even cheaper. Just like in a day of panic in March when there was a chance to buy gold 3% cheaper and silver 10% cheaper than the spot price. For European investors that are not able to buy American ETFs because of our safety is ZKB ETF. This one is quite similar, and what's interesting, you are able to withdraw physical metal if you own enough shares in both Sprott and ZKB funds. Now we go to an interesting type of company, which is royalty stream. On the precious metal market they are neither speculating nor mining. Starting a mining company is a huge expense, so mines have to borrow money. Royalty company lends money to mining company and is paid off in 2 main ways. The first and most common is gold-silver stream. It means that the royalty company has the right to purchase gold or silver much below the market price. Then the company sells it for the market price. The second method is royalty. In this scenario, mining company pays royalty company percentage of sales. I did never invest in royalty companies, but I found one ETF with exposure for them. The ticker is GOAU. It owns a few big companies, but all assets under management are worth $125 million, so it's pretty small. It owns few biggest companies like Wheaton or Franco-Nevada. I guess I don't have to explain you what mining companies are doing, but I will explain you why you're able to make bigger profits and losses. Let's imagine that the cost of mining 1 ounce of gold is $1,000. The gold price is $1,100, so company profit stands for $100. Now gold prices increases to $1,200. Gold owners profited around 9%, but the company profit is now $200, which means it's 100% more. That's the reason why mining companies' shares rise and fall faster than gold. If you decide to invest in gold and silver through mining companies, you have 2 options. You can buy individual companies that will cost you a lot of time to research them all, or ETF. 2 quite good units are GDX and GDXJ. GDX is focused on big mining companies, when GDXJ is focused on smaller ones. For that reason, GDXJ is more variable. Okay, so that's all in this video. In the next ones I will analyze stocks and tell something about investing, so subscribe if you're interested. Thanks for watching, till the next time.